Hi, this is Jason, and welcome back to Red Pill Finance TV. And in this episode, we're going back to basics. We're going to define what Bitcoin is, because quite often I get people saying, "What is Bitcoin? I don't understand why something that is not physically tangible can be worth something. I just don't get it." And I think it's very important at this point in time, especially 2020 and 2021. Where we've had serious money going into Bitcoin as compared to, in contrast, in 2017, when there was more hype and retail. Now, it's important to understand and appreciate what Bitcoin is and believe in it and understand it before investing in it. Because if you invest in it without truly understanding it, you're going to end up not backing it, and then you're going to get burnt because you're selling it off the back of some short-term worry, and then you lose out on it long-term. So when people ask me what is Bitcoin, I just have to go back to basics and say it in a way that is relatable to people, everyday people. And that is, Bitcoin is very similar to gold. Bitcoin is essentially perfectly manufactured digital gold, and I'll explain why in a second. So how they're similar is, number one, how they're produced. They're both produced by something called mining. Obviously, gold is a precious metal, and you have to mine it with lots of machinery. And similarly, Bitcoin needs to be mined through computational power, or what is called proof of work. Either way, both require significant effort in order to get, say, an ounce of gold or 1 Bitcoin. And that's the reward. Through the mining efforts, the reward is the underlying asset. Secondly, related to mining is the supply. Gold is a precious metal, which means its supply is not relatively big. If supply was big, i.e. everyone had it available in their garden, then it wouldn't be worth as much. So there's a scarcity part of it to gold. And similarly with Bitcoin, it is engineered gold in that way, in the sense that it has been programmed to be at maximum 21 million supply of Bitcoin. And how it is also manufactured, perfectly manufactured gold, is we know the supply movement. Every 4 years, the reward of Bitcoin being mined gets halved, which makes it a deflationary asset. Whilst with gold, we do know it's a precious metal, and I guess it's got a track record of 1,000 years, say, which says that, or suggests that, it is precious and scarce. But we don't know exactly how much gold there is out there. But with Bitcoin, the supply is known. We know it gets more and more scarce. And if you know economics, you know that if demand goes up and supply goes down, then boom, your price is going to go up. Even if demand, or rate of demand rather, remains constant and the rate of supply decreases, then again, your price will go up for Bitcoin. So that's what I mean by perfectly manufactured digital gold. The supply side is certain. We know how it is. The uncertainty is the demand side. Whilst for gold, we do know by its track record that it is a scarce metal, but we don't really know how much is out there and how a discovery could be made, and there could be a supply jump. And the other thing leading on is the property of store of value. So gold and Bitcoin are seen as store of value, and that's predominantly because fiat, or the everyday money, cash that we have, gets inflated. So rather than supply or rate of supply going down for gold and Bitcoin, this is contrasted to fiat, where central banks are printing more and more money each year, and when there's a financial crisis, they pump even more. So generally there's a 2% inflation target. So that means your money supply, in layman's terms, increases by 2% each year. Now, we've seen with the COVID situation, we've seen with the financial crisis that there can be liquidity pumps or quantitative easing, which means that the supply of money increases. So that's why people tend to go to better store of values or commodities such as gold, Bitcoin, silver, etc., as a store of value or a hedge against uncertainty or inflation. So that's what Bitcoin and gold have in common. And fourthly is the transactability. So traditionally, gold was a means of exchange. So you pay, say, an ounce of gold or however grams of gold in exchange for goods or services back in the day. Similarly, Bitcoin is able to do that as well, but it's infinitely quicker and transactable than gold. Now, we do know that Bitcoin is more of a store of value than a payment form at its current status, until some layer 2 protocol gets built on top of it. But still, the relationship to gold from Bitcoin is very similar in that it is a store of value. It is a sign of credibility of your balance sheet, and it is transactable if needed. It's not the most transactable, but if you wanted to send a large payment, you can still do it within 10 minutes, say. And actually, it's a lot more verifiable and quicker in transaction than your Visa payment. Even though you think your Visa payment may be settled immediately, behind the scenes of it is not. It takes up to a week. So it is transactable because it is worth value. So a lot of this goes back to why is anything worth anything? So why is gold worth anything? Questioning that, because we've just assumed over hundreds and hundreds and hundreds of years that gold is worth something. Why is a piece of art worth something? Why is a piece of paper called cash worth anything? Why is Bitcoin worth anything? So those are questions, and some of which we've just assumed over the years because that is the status quo. But when something new comes onto the scene, we have to ask the question again. And the answer is, it is an agreement. So if enough people out there in the market believe something is worth value, then it is worth value. It is not always the most rational, but if you can rationalize it and enough people believe that rationale, then it is worth money, or rather it is of value.